Right out of the gate, Super Microcomputer, ticker SMCI, traded around $30.08, down about 1.83% on the session referenced. That puts SMCI roughly 54.73% below its 52-week high of $66.44, which it touched on February 19. Context from the broader market that day: the S&P 500 closed near 6,905.74, down 0.35%, and the Dow around 48,461.93, down 0.51%. If you want a backdrop for the tape, that's the one. The high-level technical thesis: one sentence. SMCI is trading near the bottom of its year-long range after a huge run-up earlier in the year. The short-term bias is neutral to bearish on most moving average metrics, but the stock is sitting at a classic risk-reward zone for mean reversion traders if it can find support and pick up momentum. I'll unpack what that means in charts and numbers below. Technical analysis is a multi-lens sport. Here's the quick tour. Monthly/weekly. The longer view, the weekly/monthly trend shows an obvious peak around that $66.44 level and a sustained down leg since. We want to respect that larger downtrend until price proves otherwise. The big picture keeps sellers on the sidelines until the structure changes: higher highs and higher lows on the weekly. Daily, the battleground on the daily chart. Many standard indicators, 20/50/100-day moving averages, sit above the current price, which is a bearish arrangement. Price below the short and medium EMAs/SMA signal. Sellers still have control. TipRanks and investing.com both show short/neutral to sell technical signals on daily indicators. What that means in plain English: the long-term memory of the market still remembers the highs and the pain of the fall. Until price clears meaningful moving averages and flips resistance into support, expect any rally to be met with supply, sellers, at those levels. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Key levels, support, resistance, and the math behind them. Numbers you can actually use: current price, $30.08, 52-week high, $66.44, February 19. 52-week low, $25.71. Distances, because traders love percentages. Distance from the 52-week high equals 66.44 minus 30.08 /66.44 is almost equal to 54.73%. Yup, more than half the value is gone from the highs. That matches published figures. Distance above the 52-week low equals $30.08 to $25.71 equals $4.37, about 14.53% above the low. Fibonacci retracement levels, from the February high $66.44 down to the 52-week low $25.71. Traders love these. They're a common map for where pullbacks and rebounds stall or reverse. Using the swing high 66.44 and swing low 25.71, the classic retracement price magnets are approximately 23.6% retrace, $56.83, 38.2% retrace, $50.88, 50% retrace, $46.08, 61.8% retrace, $41.27, 78.6% retrace, $34.43. So, if the market bounces from $30, the first real technical resistance cluster that tends to trap short coverers and test buyers sits in the $34.40 to $41.30 band. Note the psychological round numbers too. $35 and $40 are classic magnet points. Numbers calculated from the 66.44, 25.71 move. Why that matters: a move back to $40 from $30-ish is roughly 33%. That's a juicy move if you're a momentum/mean reversion trader, and it's realistic if the stock finds a weekly base and the market cooperates. I'll show a concrete example trade later. Fib levels above. Moving averages, the bread and butter. Moving averages give the consensus price levels. The big ones to watch, 20-day/50-day/100-day averages are all above current price. That's a bearish alignment. Sources reporting short-term EMAs and SMAs show the 20-50-100 are in sell territory on daily. What to watch? A daily close back above the 20-day EMA would be a small, early sign of rotational strength. A sustained weekly close above the 50-week, or 100-day, average would be more meaningful proof that the downtrend is at least pausing. Think of the price as a swimmer, the MAs are buoys. If the swimmer gets up above one buoy and stays there, they've cleared the first challenge. If they clear 3 buoys in a row, 20-50-100, we start talking about a real comeback. Momentum indicators, RSI and MACD. Short summary from the tape, RSI, 14, is in the 30 to 40 range. Investing.com reported 37.2, which is weak but not deeply oversold. MACD on daily shows negative momentum. MACD histogram negative/MACD line under signal, suggesting sellers still have control. Interpretation, RSI 37, the stock has room to bounce, oversold territory is typically less than 30. But it's not screaming, buy, just yet. A rising RSI back above 50 is a clean early momentum improvement. MACD negative, trend momentum is with sellers. A MACD crossover, MACD line crossing above signal, would be the technical confirmation many traders wait for. RSI is the shortness sensor, it tells you whether the crowd is exhausted. MACD is the engine, it tells you whether the train is still rolling downhill. Volume and liquidity, the confirmation ingredient. Volume is the truth serum of technicals. Look for 2 things. Volume on bounces. If a rally from $30 to $34 occurs on below-average volume, it's probably a dead cat bounce. A convincing rally needs above-average daily volume to show buyer commitment. Several data services show SMCI's 50-day average volume in the tens of millions, so watch if volume picks up above that. Volume on breaks. If price drops through $25.71 on higher volume, that's a structural change. New low equals new trend. Conversely, if sellers get exhausted near the low with diminishing volume, that's a recipe for a mean reversion trade. Imagine price as a rubber band. Volume is how hard people snap the band. Big snaps equals meaningful moves. Tiny snaps equals noise. Patterns to watch, daily/weekly. These are the chart morphologies that could set up trades. Range base/rectangle. The stock has shown range behavior this year, it loves to move within a band. A defined range with clear support near the low gives mean reversion traders a setup. By near support, sell at the mid/upper range. Double bottom/W pattern. If SMCI prints a higher low above $25.71 and then retests resistance with higher volume, a classic double bottom reversal could form. That's bullish only if confirmed with volume. False breakout/shakeouts around support. Keep an eye for intraday breaks under $25.71 followed by recovery. This is where retail gets burned and smart money accumulates. Chart patterns are like rom-coms. They take time to develop and often come with awkward pauses. Don't confuse a first date, an intraday bounce, with engagement, a weekly trend change. Heat map of scenarios. Best case, base case, worst case. Best case, SMCI finds a weekly base, volume picks up on a 3-day rally, the MACD crosses to positive and price clears the 20/50th day zone, rally to $40 plus in several weeks. Fib levels act as stop-and-go targets for profit-taking. Base case, brief bounce into the $34.36 zone, stalls at resistance, 78.6% fib/20 to 50-day MA, oscillates in a choppy range until market liquidity returns after the holiday period. Worst case, the stock fails support and prints new 52-week lows under $25.71 on heavy volume, trend extension to new lows, invalidating long setups and favoring short bias until a new base forms. Volume on that break would be the confirm. Note this as well. Do you want peace at heart? The next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. John 1:29. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.